It's Tuesday, September 17th. I am back. I am back from the shenanigans of an 80-year-old. It was my parents' 55th wedding anniversary. I was put in charge of the balloons, blowing up the balloons, I should say. And there were two big fives that were supposed to hang over the cake. Your boy overinflated one of the fives. So it turned out to be a 5th anniversary, not a 55th anniversary, which was good. Listen, made everybody feel young. And the bartender told me that, there were quite a few people who just sat and never had an empty glass, which I guess is the indication of a good party. So it was good. Thank you for hanging with me. And if you're back, I appreciate you guys listening. Again, I know I'm off like this. Part of the reason that I tell you guys to get these tools is so that you can manage things. I don't want to teach you, just give you a fish. I want to teach you how to fish. And so the goal of this podcast is to give you the tools so that you're able to do everything that I do on this podcast and essentially make some money. That's the goal of the podcast, not just to entertain you, not just to tell you to go balls deep into something, not just to tell you to just stick the tip in, but again, it's to try and guide you in the journey of your stock portfolio so that you might be able to retire early, you might be able to afford a vacation, you might be able to do whatever you need to do. I am a buy and hold guy. I don't do options. So if you're new here, hang on. I got a good show for you. I like to talk. So I'm there. While I was gone, I posted in the newsletter. The newsletter is 100% free during the week. So if you're interested in just charts and things like that, this is the newsletter. It's at dailystockpick.substack.com. It is on the link tree. Everything is on the link tree, linktr.ee/dailystockpick, and you can see it. I got Trendspider up there. We'll go over everything that's here, but the newsletter is free and it includes charts. And while we were gone, I told you that VOO and QQQ both got entries. This one at 468, you're trading at 476 right now. I have identified 450 to 500 as a range that this one has been trading in. So in my mind, I don't think that you trade QQQ. I think that you look for entries on QQQ. 468, great. Good entry. It's not bad. 450, better. But honestly, to ask yourself this, if I'm buying 5 shares of VOO, let's just make it 10 shares, okay? You're putting about $5,000 to work and you're buying 10 shares. The difference between 450 and 460 is $100, okay? It's not that much. Again, that may be Gary math. I'm doing it in my head. But again, the point is, are you going to notice in 20 years when you want to cash out on QQQ, or 5 years from now when you're pulling out some QQQ to try and buy something else? Are you going to notice that? And I try and put people in that perspective that you can't time the market. It's time in the market. So at 468, it's great. You want to take a look at this. The 4-hour algorithm over 2 years, it makes you 55.2%. Okay? The actual asset performance, if you were to just buy and hold over 2 years, it's 55.9%. So getting in at these entries, it will probably make you as well. But the point is that you can sleep at night, because the exits are just as important as the entrance. You don't want to go all in and all out. But if you can't sleep at night because QQQ has grown up to be too much of your portfolio, get out. And here's the thing, that we're going to go and look at some seasonality of this. I'm not going to let you go with only 8 years. We're going to go back to take it back to 2000. Okay? September's still the weakest month at 40%. Okay, your mean change is minus 2.43. We're only halfway through September. We've got rate cuts this week. We'll go over all the catalysts. But if you look at a weekly and you look at a monthly, we're still hanging on to that support level of 450, which was a previous high, and then it pulled back. Okay? That's all I did was, hey, this pulled back. The seasonality still scares me. But if you go back 25 years and you look at October and you look at November, they are two of the best months. November is the best month seasonally. So that's 25 years on QQQ. We'll go and we'll take a look at VOO the same way. Okay? My point here is you want to buy into this market. You want to find some entries and learn how to chart, because that's your best opportunity to find entries into the market. Charting is not that tough. If you want a little leg up, it's my 4-hour algorithm. And again, VOO 512. What does the algorithm get you? It makes you 41.7%. If you just bought and held this stock for 2 years, it's 40.3%. Okay, and it's not like you're trading in and out all the time. It's 19 positions over 24 months. That's less than once a month. So again, my preference is to go out and enjoy your life, not to sit here and look at candles all day. So I get alerts on my phone when VOO and QQQ get entries. And I go and look at the chart and I say, that looks interesting. So you really want, let's look at, we'll look at the seasonality of VOO, 14 years. Look at September. It's horrible. Then look at October and November, two of the best. The best month for VOO is July. So you want to take a look at that. That again, these are opportunities for you. The newsletter will have all these charts. Sign up for the newsletter. If you're interested in the 4-hour algorithm, we'll go over this more. It is in Trendspider, and that is the top link here on Linktree, and the pricing right here. They just got over with a fall sale. It was while I was on vacation. But again, standard is $53 a month. Enhanced is $98 a month. Enhanced is if you have it within your budget. Okay, advanced, this $223 per month is probably the best one if you're new to trading. Again, make sure you have this in your budget. If you don't, later in the video, I'm going to give you Warrior Trading has a free online course on Thinkorswim, which is free. And the video is about 30 minutes, and Ross goes through how to set it up. But just make sure you have access to charts. In Trendspider, it's a tool that I use because I set up the 4-hour algorithm in there. You have to have a strategy. One of the things that I'll show you later is Michael Burry's strategy. Everybody has a strategy. You have to figure out yours. Let's talk about this week. Yesterday we had, all of this stuff on Monday. Today, earnings watch. Ferguson Enterprises all day. We have A Labs and Reddit. The IPO lockup, so those expect some volatility there. Deckers has a 6-for-1 stock split that will be effective at the open market open. Salesforce is holding its Dreamforce, Electronic Arts First Investors Day, TD Cowen, blah, blah, blah. This is Catalyst Watch. It comes out on Friday at 3 p.m. So I may be covering it for everybody who signed up for Seeking Alpha Premium. But again, this is my best. On Fridays at 3 p.m., I get this email. It's not an email, but I get the alert under my analysts. I can cover it. And I get this, and I look at it, and I say, okay, what am I setting up for next week? So I have my week planned. One of them is, Thursday we have FedEx earnings. I think that's kind of interesting. We'll go over the implied move on that one. But again, the biggest thing this week is just the Fed. It's the Fed. We have on tomorrow, Wednesday, FOMC makes the policy announcement. They have their meeting on Tuesday. 2 p.m. on Wednesday, make their announcement. Is it going to be a quarter point? Is it going to be a half point? I don't think it matters. But again, I pointed this out last week, and I think it's very, very interesting, is that the Fed interest rate decision is not the 9th inning of a ball game. So it's not the end game. This is the first inning of a 9-inning game that could go into extra innings. So understand, this is just the first step. And so Wednesday is not the final step. If they go a half point, the market may actually react poorly because they may freak out and say, what does the Fed know that we don't know? A lot of these notes are from last week, like I said, so bear with me because I'm just getting through weeks. But last week had their best weeks. Both the S&P and NASDAQ had their best weeks of 2024. The previous weeks was the worst week of 2024. So if you're trading on a weekly basis, hey, have at it. I just don't intend to kind of be on a weekly basis with the Qs or VOO. But if you're looking for entries, you want to buy when it's uncomfortable. Buy Buffett's quote about buying when others are fearful and selling when others are greedy. That's what he was doing all summer. He raised all that cash. So understand that's when you want to try and take your positions into, are we in for a bull market? Well, maybe the indexes, again, we're not at all-time highs. The all-time highs are about 520, 530, somewhere in that neighborhood. It might be 525. We're trading at 517, so you're really close to highs. When you look at a weekly chart on this one, still looks good. Again, everybody was complaining, I'm negative during this first week in August. Gary, I'm negative in my account. Well, why are you negative? We're at all-time highs. It's probably the balance of your portfolio. Probably just not a good mix. But again, they had their best weeks last week. I thought this clip was fantastic, okay? For those of you non-sports fans, you may not know. Al Michaels. I always talk about not having your money sit in triple leveraged ETFs. Well, Al Michaels bought FAS, okay? This is a triple levered bull on the financial markets, okay? Daily triple levered. And he asked Josh Brown, he goes, I'm up like 1,000% on this, Josh. He says, hey, I don't understand. You told me not to buy this, and I bought this and I held this, and I'm up like 1,000%. Can you tell me why? And Josh Brown was like, hey, it's probably, he bought it way back here in like 2022 when it was near the bottoms at 74. I'm sorry, he's probably up double. But he bought it when it was down here, and he said, I just like this. He might have bought it down here in 2023 when it was 55 and close to tripling and stuff. But again, he bought it at a low. And this is going to get to 151, and then it's probably going to bounce back. But again, the performance of the algorithm, 126% versus 61%. 61% if you bought and held it for 2 years. That's not bad. But again, 126% for in and out. Over 24 months, there's 23 positions. So you trade once a month. You're just getting out of a 10% gain. And you're going to use that 123 as a support level. So if you buy at 127, if you break that 123, you want to sell. Again, it's a triple leveraged ETF. You don't want to hold on to this forever, but you want to wait for the algorithm to tell you when to get in. Probably will get in very, very soon around 127. You can buy in. You win 48% of the time on FAS. But I thought this clip was fantastic. So I'll put this in the newsletter. You can watch it. The other thing I thought was fantastic that I read was this, the Beachman from Substack. And I am doing some more kind of social media stuff on Substack. I would download the app. I actually like the app. It gives me, for people that I subscribe to, it gives me a good look at kind of the markets and some specific stocks. And Marita is great with her stocks. Her and her husband just wrote about NVDA. And this comment from Beachman, allow me, if you will, an opportunity to add a fifth horseman. We are in an inflection point in data center design and implementation. Cloud providers are shifting away from CPU towards AI GPU-based infrastructure. So his basic presumption is it's not just the monetizing of GPUs and AI. So all the money that they're putting into NVIDIA, it's not just the monetization. They're actually rebuilding data centers from a CPU data center to a GPU data center. So the differences in that kind of goes above my head, but I do know that GPUs are significantly more efficient at doing what needs to be done in computation. And so a CPU is significantly less. The CPU to GPU processing step up is 20 times. And the only way to do generative AI is based on the horsepower of the GPUs. That's where NVIDIA has the lead. That's why Mark Zuckerberg is on there on stage with Jensen Huang, and why the Googles of the world and the their Tensor chip. I think it's a GPU. I mean, I think it might be a TSU or something, but they developed something that's similar, but they're still behind NVIDIA. So I thought that comment was great. You can go and read that comment. This is a great, a look. We're going to take a look at Micron first, because Micron actually on the daily has a double bottom. Now, this is a stock that has come way, way down. It is just in a falling knife scenario. It's up 1.33. But when you look at the daily, I talk about double tops all the time. There's a double bottom down here right at, and I'm looking at a chart that Trendspider posted in their weekend news. But you can see right here where it bounced off this 89 kind of level right here and pulled back in January to February. And we saw a nice little pullback there. And then it broke through and it went right up there. This might be used as a good support level right here. It might be something that you want to take a look at. Now, I will forewarn you that right here, the death cross, okay, on the daily, the 50-day crossing under the 200-day is a death cross. It is historically a bearish move right before their earnings. Their earnings are coming up on September 25th. Micron's performance has lagged up just 8% this year, down over 45% in the last 3 weeks. A potential turnaround as a double bottom forms near $83 a share, supported by bullish RSI divergence. Again, you look at this one, the RSI going up, the stock price is going down. That's divergence. Rebounding off the point of control. So I'll put that little clip in the newsletter, but I thought this was interesting right here. I thought that this 97 might provide some support. It did seem to provide. If you bought at that support level at 97 and held on through the bottom, you had a chance to get out. You have a chance to get back in. I do think that this one is an interesting one, just from a standpoint of, hey, Micron's been beaten down. It just hasn't kept up with the other chips. Now, there's a reason it hasn't kept up with the other chips, and let's go take a look at Seeking Alpha and show you why. When you take a look at the valuation of this one, that's the problem that you have. They are not making money, okay? They're expected to make money, but their profitability, 11%, gross profit margin. The sector is 49%. It is a 100% a financial problem with this company. Now, when you look, there's 36 analysts that cover this. They have a price target of 151. This one's trading at 87. I don't want you to go out and buy and load up on this because of the 5 factors that the quant figures out. I would say momentum holds a huge, of the 5, I would say this one's probably maybe second, maybe first. Over 3 months, you're down 38%. Over 1 year, you're up 24%. Okay, 9 months, you're up 7%. But it is interesting that it had a double bottom. I like that one. It might be interesting to look at. Now, there's a CANSLIM article also from Trendspider that I'll put in the newsletter, and it's on Arista Networks, ANET. And ANET, they did a growth stock spotlight on CANSLIM. And if you don't know what CANSLIM is, I'm going to put this link in the newsletter as well. It's a explosive growth stock methodology by William O'Neill. And this goes over everything that you can do. CANSLIM is a scanner that you can set up in Trendspider that, again, is set up all for you. When you get Trendspider, you can just import it into your system, and you can look at it. Among the names currently appearing in the scan, Arista Networks stands out with the most impressive earnings per share over the past 12 consecutive quarters. ANET has achieved consistent quarter-over-quarter, year-over-year earnings per share increases. This sustained growth has driven a significant rise in the stock price, propelling its relative performance to an impressive level where it outperforms 94.4% of the S&P, of the S&P 500. So let's take a look at ANET. How does it do in my algorithm? Makes you 126%. If you just bought and held, you make 192%. This one is just a monster. Right now, it got you in at 336. You're at 359. It's going to get up probably to this 370 level, and you're going to see it's either going to confirm that we have a move higher or it's going to reject off that level. But again, do you want to buy at 359? I don't know that that's a great buy right there because your RSI is high. But the CANSLIM actually identified this one as a buy. And the reason why I'll put it in the newsletter. They explain it 100% better than I do. Howmet Aerospace, all of this link will be all in there. Just remember, when you sign up for Trendspider, in order to get my 4-hour algorithm, you have to go back to the link tree and click on that link. And then you can get put into my program and you can get the 4-hour algorithm. You have to email me, but I do. Now, let's talk about Intel. It was up like 6% yesterday. It was up 5% pre-market. It's up 3% now. They said they're going to sell their foundry business. So, I mean, that's huge. They're basically throwing news out at the market to try and boost the share price because the share price is just, it's horrible. It's horrible. In my mind, do you want to even own this one? I don't know if it's actually worth owning. Honest to God, I don't know. I mean, this is one that confuses me because they had such a lead in this semiconductor market. Such a lead in this semiconductor, and they blew it. They just blew it. My algorithm makes you 7% over the last 24 months. Take that with a grain of salt. You lose 35% if you bought and held this one, okay? Now, if you bought at 19, you're doing pretty well because you're up a nice 10% or so. You still have confirmation up here. The 50-day started to turn. Your Bollinger Bands cinched up a little bit. You're just getting above that MACD. The RSI is at 66. I just don't like this stock. When you take a look at this from a weekly standpoint, look, it's an upper left to bottom right. And from a weekly standpoint, you don't have confirmation. So I'd say trade this one on very tight time frames. Do I think it's going down to 15? It could. I mean, it's not like they haven't made false promises before. So I just don't trust this management company. Again, trade it. I wouldn't own it. I got a lot of questions. Is it time? Is it time? Is it time? I just don't like it. Now, one that I do like, Amazon. Amazon Prime Day deals returns for October 8th and 9th. It was a record-breaking Prime Day in this retail environment where you have a weak consumer. You want to take a look at opportunities. And I think Amazon with record retail profits is an opportunity. And you want to take a look at that. Now, there are some things with Amazon that will be an issue. Let's take a look at Amazon. Here's the chart on Amazon in the 4-hour algorithm, okay? That green line, it's just a trend line that I put in from a bottom. But you're taking a look at a 4-hour algorithm here, and it makes you 17% versus buying and holding makes you 41% over the last 2 years. This is a stock that's just continuing to go up. It broke that trend line. Is it going to get back to that trend line? I would say yes. You are trading at 188. That is historically, when you look at a weekly chart on this one, that right here in July 2021, right here in November 2021, right here all the way from April until May, until it broke out over it, it was resistance, okay? It will provide additional resistance. And then you've got a second resistance on Amazon because Jeff Bezos has said he will sell $5 billion worth of stock at $200 a share. That's what he's planning on doing, is put it out there. I think he's at between 2 and 3 billion. So when you get to $200 a share, you have that additional resistance. So if you're going to buy this, I would say buy it below 188, and then you can sell when it gets up to 200 if that makes you feel better. But I would say for the long term, I do think it's a $250 stock minimum. We can go and take a look at it. The Wall Street analysts say it's a strong buy. The quant says it's a hold. The only thing that's bad is the valuation. Okay, momentum's a B+. When you take a look at this from a Wall Street analyst standpoint, $219. There are 61 analysts that cover this, and they put an average of $219. Now, they have chased it up, but the stock price is benefited from, again, I think this is a great opportunity. Another one that's an opportunity, Microsoft. They are using the Apple model here. They just raised their dividend by 10% to 83 cents. It means nothing. For a $438 stock, you're not worried about 83 cents. But it authorizes a $60 billion buyback. And that kind of news boosts the stock. Do you want to buy it here? I bought at 420 something. Again, you take a look at this one and we look at a weekly. Where's that trend going off of these? Well, it looks like it's above the trend. When it touches that trend line at, and it did at like 415, 417, somewhere in that neighborhood. Again, look at the weekly. The MACD's low, could be setting up for a nice little run. Do the rate cuts push this one up? I don't know. Again, that's good news though. See, they're flush with cash. Now, Apple receives FDA approval to assess sleep apnea with the watch. Why is that big? You may have read that AirPods get hearing aid classification now. Why is that big? It's because they're medical grade devices. That means insurance will pay for them. That means they expand the device hardware, which means they can sell more software. Again, that's where Apple is. Now, do I want to buy Apple here at $215? I had said that at $230, it made no sense to pay 30 times earnings. The other thing with Apple, you may have heard it, concerns over iPhone sales are just a blip on the road for radar. That's what the analysts say. That's what the analysts say. I tend to agree with them, but again, the valuation of this one, tough to say. You can see right here at 230, that's a resistance level right there. It's clearly setting it up. Do you want to buy at 215 and then see it drop below 200? That would be a little bit concerning because your MACD is super high, your RSI at 55. If they are seeing a slowdown, understand how these analysts do this, okay? Apple's not coming out and saying we're seeing less devices. They do it based on a time frame. So they're constantly going in there and they're ordering iPhones and they're seeing when the delivery process happens. And when they're doing that type of analysis, they're just looking at that. Now, there's a couple of caveats to this. If you're just basing demand on a delivery, Apple has said they're making more iPhone 16s. So the delivery date may not be, the actual demand may be up, but the delivery date might be the same because they've just made more. So would I buy this one here? Probably I would wait till, 215, 210 when you get that 21 day. 21 day has been a pretty good sign to buy. Hasn't been horrible. Yeah, you've broken down a few times from it. But again, this is the largest company out there. In my mind, I don't think it's going to, crash down to 200, but it could. It could. This was a good article. Webbush, Dan Niles. Not Dan Niles, Dan Ives. Dan Ives. These are great stocks. In addition to NVIDIA, other tech names linked to AI that should benefit from a rate cut include Microsoft, Oracle, Palantir, Salesforce, Dell, IBM, Apple, AMD, and ServiceNow. And that's his watch list. He talks his book. I mean, that's what Dan Ives is doing. He's talking his book, but I tend to agree with him. He puts it out there. His stuff is out there. I like that he puts everything out there. Now, the other one that I like, Dell and Supermicro. Mizuho started coverage for the pair. They're both up today. Dell's up 2% and SMCI's up 1%. Again, I like both of these names because as they build out, we go back to that comment on these Amrita Roy's Substack, that it's not just, developing new data centers, it's redeploying data centers. And what do they have to do for that? Dell and Supermicro build those racks. And so they have to put in new racks for those chips. I like it. Now let's talk about earnings this week. It's a fairly light earnings week. But there's an interesting one, and this from my weekly stock pick. The implied options market is implying that FedEx is up or down 7.5%. I find that interesting. If we go and look at this, and we look at FedEx, FedEx and Lennar report on Thursday, okay? General Mills, it's kind of boring to me. But FedEx is interesting because when you look at their expected revenue, and they report, again, in 2 days, it's 21.99. Okay, 21.99. They reported last time 22 billion. So reduced revenue. Now their earnings per share, they did earnings per share 5.35. They did $5.41. It's expected to be $4.83. Interesting. I think that's for me. It's interesting enough that a plus minus 7.5. Let's go and look at the chart. FDX is the symbol. FedEx Corporation. Now, I'm not a huge fan of FedEx. I do think that they have some cost issues and there's some, just general issues, but I do like the new management. You've got a gap down here from their last earnings of 257, and it went all the way up to 283. It's been covered all the way back to 274, but you still have this significant gap. Now, my algorithm makes you 24%. Buying and holding makes you 42%. You had a buy here at 289. You're at 297. You're rising right before earnings, just like you did last time. Is there going to be another gap? Is there a much higher move? Well, the previous high in 2021 was 318. If we go and look at FedEx from a standpoint of seeking alpha, and we say, okay, What does Wall Street say it's worth? Well, when we look at Wall Street, they say it's 322. Interesting. I mean, they've been continuing to raise the price target here. So there's, again, a decent amount of analysts, 31 analysts. The problem has been the growth. Again, revenue growth is down 2% year over year. Levered free cash flow down 2% year over year. Their revisions, they have 7 up, 19 down. Revisions up 3, 19 down. So you can take a look at this. I think it's an interesting one. I would bet that we see a plus 7%. Again, Prime Day was big, but Amazon doesn't typically deliver with FedEx. I get Chewy from FedEx. I get some of those other retailers from FedEx. But again, it's ranked number 3 out of 14 in the industrial section. ZTO and CH Robinson are above it. But I do like the name. I'm not going to probably play this one, but that implied volatility move does make it interesting to kind of throw in there. Now, Lennar, plus 6%. You can do that analysis on Lennar. I said earlier that I would include a video of Ross, okay? This is Ross's Thinkorswim day trading challenge. In this challenge, he goes over he has a small account, and he's not using leverage. He's not using options. He's basically doing momentum trading, and he's going to do this challenge. This was released on September 13th. He goes over his entire setup in Thinkorswim. He just uses Thinkorswim, and it's a great video. Again, if you're interested in that setup and you don't want to spend the money on Trendspider, go and look at this. Just understand, Ross's trading is momentum trading. Okay, we talked about strategies last week. Ross doesn't care about the fundamentals of a stock when he's trading a stock. He cares about the fundamentals of his stock in his investment portfolio, but not in his stock trading portfolio. He's just looking for candlesticks and just the action of the actual stock to try and find winners. That's all he's doing. So it's interesting that he's got a setup in Thinkorswim. Am I following that one? No. I like my Trendspider setup. I don't like day trading. Ross will typically trade on like a 1-minute candlestick, maybe a 5-minute candlestick. But he goes over everything in this video. I thought it was good. I think I watched 5 or 10 minutes of it. It's quality. Ross, his results are not typical. So understand that's not a typical thing. But he goes over his strategy, and that's what I like. Is Ross goes over all of this stuff. So. We're talking about, before we get to that, let me just take a little quote from Steve Burns. Cutting losses explained here, okay? If you get on the wrong train, you should get off at the next station as soon as you realize you're on the wrong train. The longer you stay on, the more expensive the return trip may be. That is cutting losses explained. The longer you stay on, the more expensive the return trip may be. So I talk about this all the time. A 50% loss will take you a 100% gain to get back to where you were. Cut your losers. Just make sure. Cut your losers. And that's it. Now, we talked about strategies last week as well. This is Michael Burry's strategy in one page. This is Michael Burry's strategy in one page. That's it. Again, that's it. Michael Burry's strategy in one page. Go and read it. You want your strategy on stuff? Go and read this one. I thought it was really good. Social requests. Rizzy. I've been keeping my eye on 3 stocks. RITM, IONQ, PSNY. They are not the sexiest stocks, but they keep improving on the sheets. Any thoughts? RITM, let's take a look at the stock chart. I will tell you that RITM, you didn't include anything about these things. So I'll just kind of look at them. RITM Capital Corp. What is it? Let's see. RITM. Rhythm Capital Corporation. It is a... Let's see. Is this a REIT? Let's see. Asset manager. Yeah, it's a REIT. It's okay. I mean, it's doing well. I'm just not a fan of REITs. Let's look at IONQ. I will tell you this particular one. It's a quantum computer stock. It's okay. It's just risky. I mean, that's the thing you have to realize. They're not making money. IONQ is not making money. When you look at the valuation of this thing, they're not making money. Their growth, revenue growth, 90% year over year, but the profitability, they're not making money. So it's risky. Trade it. I would just trade it. And PSNY, I think that was one that Polestar Automotive. I don't know what kind of interests you in this one. I've ridden in a Polestar. I wasn't impressed. I mean, it's a decent car. Anything here in the U.S., I would buy a Tesla from the charging standpoint. A Polestar, you got to use shitty chargers. So, I mean, again, the valuation of B+, Wall Street says hold. It's got a $2.44 price target. It's at $1.87. But when you look at the valuation of it, they're just not making money. They're just not making money. Their growth, they're losing 22% revenue year over year. That's not, cars are expensive. So that's where I would go with those three. They just look risky, Rizzy. I mean, I wouldn't put my money into any of those. But again, I'm not you. If you want to put your money into that one, I think you're fine doing it. I would just trade them. I wouldn't trust, I don't trust a REIT. And then IONQ is not making money and PSNY is not making money. John, elevator pitch. It's a foreign stock, LVMUY. Looks poised for a breakout, maybe to previous highs. Lower and middle classes are feeling economic pressure, but high-end consumers are doing well, so perhaps the stock will bounce. The financials look decent. The RSI is oversold, yet slightly trending upward. It is wicking above the VWAP. If pre-market direction looks good, what do you think? Enjoy learning from you daily. Thanks, John, from Spotify. LVMUY. I think this is Louis Vuitton, or I'm not even sure. Vuitton Hennessy. So here's my take on something like that. If that was an elevator pitch, I would say, you didn't tell me what your time frame is. I would assume it's short term. And you didn't tell me the goal of the stock. You just told me the high-end consumer's fine, but it doesn't look fine. I mean, this looks like it's bouncing all over the place on the weekly. If you're trying to time a low, I would say that, hey, the MACD doesn't look like it's positive. The RSI doesn't look like it's positive. So let's go and look at the valuation. LVMUY. Let's look at the valuation of this one. Let's see. They're not making money. They're expected to make money, but they're not making money. The growth, 1% year over year. Expected 6% year over year. Again, it's a consumer discretionary company. It's ranked 12 out of 34. I don't know that it's, Ralph Lauren is number one. Ralph Lauren, when you go and look at the valuation, they're making money. Their growth, they're growing 3%. Their revenue year over year. Their levered cash flow growing 203%. So they're making money. So I don't know that that's a great elevator pitch because, again, you didn't include your time frame. Because when I look at it this weekly, if I'm making a pitch on Apple, I'm saying they got devices. I'm saying they got software. I'm saying that they got the buybacks. I'm saying that they have a good dividend program. I think that they have opportunities out there to disrupt some industries, and my time frame is long. So that's where I think the elevator pitch didn't hit for me. The financials, I don't think they look different. That may just be a kind of thing. The VWAP, again, I think if you're looking at this one from a short term, I think you trade it. My algorithm makes you 42% on LVMUY versus 5% just buying and holding. And my algorithm got you out. So in my mind, I don't think there's a gap above it. Might be a good opportunity, but algorithm hasn't gotten you in. It probably will get you in today. You win 39% of the time. I'd rather find a stock that wins a little bit more. And right now you're in that downward trend. The 50-day hasn't exactly moved around. The Bollinger Bands are wide open. The Bollinger Bands right here on August 30th cinched up. They were telling you it's going to go somewhere, up or down. And it crashed down from 148 to 135. So, again, the elevator pitch, has a little bit more to do with, I think it was too long because you want to make it 30 seconds or less. And I think it focused on more of just hypothesis rather than actual facts. Because you said the lower end and middle classes are feeling economic pressure, but high-end consumers are doing well. That doesn't mean that they go out and buy, all of this expensive stuff. And that's clear. They're just not buying this stuff since March. For some reason, it's come down from March. And it might just be a poorly run company. I don't know. So I don't think the financials look good when they're not making money. Scans. Let's look at some scans. Scans are stocks in my 4-hour algorithm that show an entry. Exxon in the core portfolio. Exxon shows a nice little entry. You do have to worry about that 50-day. Now, the 50-day and the 200-day have moved down. This is a stock that is in the energy field. I would just buy it between probably 110 and 120 and just trade that. I mean, look at this range. Probably since, look at this, since it crossed 120 here. And we can look at that 119 right there. That goes all the way back to April. And I think you're fine buying 112, 112.14. You're trading at 113. So if you want a little small one with some safety, again, this is a stock that it just got an upgrade. It should be fine. We talked about seasonality. Look at the last 25 years of this one. And if you put in election years, it's even better. If you think, energy will explode if Trump wins. So if you think Trump's going to win, start investing in energy, because I do think that specifically American companies will benefit from that. Goldman Sachs, even though we're pumping out more than we ever have, Goldman Sachs, this is one with the rate cuts. I think they're going to see some indicate. I like this one here. 483. I think anything under 500, I think you're fine on that one. Occidental Petroleum. This is one that I followed Buffett into. Should have just bought Berkshire. The chart of Berkshire is totally different than $51. Is it too cheap? Probably. Again, that's super low. Buffett was buying around 60, and that's why I put the dollar amount around 60. When I was saying, hey, buy it under 60 and sell it over 60, I sold it over 60. So I just got out of it, and I'll put my money when I want to into Berkshire. Berkshire is down a little bit from its highs. It hit all-time highs, so it's fine. Pan W, Palo Alto Networks. I think this is a $350 stock. It's at $341 right now. $346. I think it's going to hang out there around $350. You don't have earnings until November. You already had your earnings, so the catalysts are done. Other than, hey, somebody may have another cyber attack. And then that one gets taken down. Simon Property Group in the core portfolio. This one, I was telling people at 110, 120, buy this one. Pour your money into it. It was way back when. It slowly climbed up at 164. I think it's a little bit expensive. That's all-time highs. You take a look at a weekly on this one. This one, you talk about the consumer being weak. This one's got, the way back here in November 2021, the high was 171. It's trading at 165. It's a little bit expensive. Target got a one. We talk about, all-time highs. This one, I think 323 is the all-time high. I said, hey, that 187 is going to provide you some resistance. The 200-day has been providing some resistance. Ever since they had earnings and that earnings one, we went and we covered the gap back down to 145. You're at 151 now. My algorithm loses you 8%, but if you bought and held this one, you lose 11%. Let's take a look at a weekly. Where's the weekly going to come? It's going to probably come up to this 170 here and bounce off like it did back here in April. I just can't see this come. I don't shop there anymore. It's not that it's a bad store. I just don't. I shop at Walmart. We got PayPal, which I saw a bunch of commercials for. We got Travelers Insurance. We got Dow. We got Nike. We got Fang. We got Copart. We got Roper. We got some crypto, BITW, ARKA. We got some energy with Fang and XLE, leveraged DTS, DPST, which is the triple levered regional banks, which I think probably have a nice little rebound here. $99. Seems like it's getting up to 100 and just bouncing back, but it's at 101 right now. 99 was the entry yesterday. Weekly standpoint, again, this is a triple leverage DTF, so do not expect this one to trade, huge. FAS was just a lucky pick by Al Michaels, what we went over. But this is a good one. Sectors, XLE and XLP. Okay, XLP is the consumer staples. And this one has just been on a tear. Algorithm got you in at 77. This is telling me that, hey, there might be another run in this one. I think the RSI is just too high. I do think that we see another leg down at some point. There are certain sectors that are just run up too much. Okay? That's my take on it. So Tune in tomorrow for more great content, whatever you want. Just make sure, again, there's a couple of things. We did have a new alpha pick yesterday. I think it was yesterday, the day before, the 15th. Alpha pick's a curated portfolio. You get $50 off when you sign up through my link tree. And again, the performance of it, 114% return from July 1st to August 8th versus 38% for the S&P. It just, the portfolio performance, you get one stock pick on the 1st, one stock pick on the 15th. They just had two sells. GCT was actually one of them. Whatever it was, that I was in. That was one of them. And they said, hey, it hasn't done well. And so they pulled it out of the portfolio with a fairly big loss since they got in. And that was just since March. But they do tell you when to sell. And that's the key. And the one reason I'm not a huge fan of, hey, you want to buy here and sell here. I'm not a huge fan of that. But this one teaches you fundamentals with what they release every 1st and 15th. And then when they get out of a stock, they tell you exactly why they got out of a stock. So I think it's interesting. Again, I like this. Make sure you've got enough money in there. There are certain strategies that you can do to get in. You can buy the whole portfolio because they do outline the percentage of the portfolio. So you say you have, $15,000 or $10,000 that you want to put into this. You can just buy it based on the percentage of the portfolio of what the stock's at. And then, hopefully you make money on that one. You perform with the portfolio. But again, you can look at the year to date. You can look at the 1 year. They give you a 5 year of the portfolio performance. So I do like that one. If you want Seeking Alpha Premium and you just want to look up your own stocks with the quant has 5 categories. Has valuation, momentum, revisions, things of that sort, growth. And you can look at any stock that you want that they cover. And it's thousands of stocks that they cover. In fact, one of the things that I like to do is go over here and just go to top stocks. And they list the top stocks, PSIX. This is one that has been a monster of a stock, okay? 1 year, it's up 423%. Year to date, it's up 743%. Okay, when did the quant tell you it was a strong buy? We can go back. The quant told you it was a strong buy right here at $4.20. Today, that's at May 14th. Today, it's at $17.29. So again, that's all from just going over here to the left-hand side, hitting top stocks. What's that? Another one? Heritage, Clover, RMTI. And you can just look at those stocks in the quant. To get that, it's just Seeking Alpha Premium. Okay, it's this second link right here. You get $25 off. You get a free 7-day trial. So go and try it out. Again, click on that link and you'll get your free 7-day trial and $25 off. We went over Trendspider. That's the other thing. Now, Webull, my favorite trading platform. When I'm out on the road and I want to trade a stock, a triple leveraged ETF, I think half of my account is in NVDA and IBIT. And there's some MicroStrategy in there too. And I like trading that stuff. And it's not a managed portfolio, but it's up like $8,600 or something from $1,000. So again, I like Webull. Webull's my favorite mobile but I'm not putting a large amount of money in there. Again, I have $8,500 somewhere around that right now. It's not a large amount of money. The main money of mine is in Fidelity and the newsletter. The newsletter is completely free during the week. So there's no reason not to get it. You can support me and get the paid newsletter, which I will be doing. By the way, what I will be doing is a course this week. I'm going to release a video course. You guys like the podcast. You like the way I do this stuff. So I'm going to release a video course. If you have any questions, hit me up. Okay.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.